Hey everyone, Jason Engelman here, CEO of Freaky Fast Homebuyers, joined with Collin Campbell, and you're listening to our podcast, Brick by Brick, Building Generational Wealth Using Single-Family Homes. And today we have a very interesting topic, and it's one that is, I guess, one of the biggest things that investors, and if you're successful at all, you are going to have to deal with this, and that is the joys of paying Uncle Sam.
Yeah,
the taxes are coming due. I mean, we're fourth quarter, so we're planning for end of year liabilities that we may have for 2025. So what kind of investments can we invest in to maybe offset some of that tax liability? It's amazing that we are 7 weeks away before the year is up. 2025 may have been the fastest year of my life. I can't believe it's over.
Yeah, I know. The Christmas music is playing already. I personally think it is still too early for it, but it is that signal that it's the end of the year, right?
Yeah.
So we're addressing what's on a lot of folks' minds, which is that big question of taxes. If you're not thinking about it, you should be thinking about it if you're a high earner. And we're here to help provide some additional food for thought in that. So we're talking about our new investment fund, the Tax Wealth Builder. And my goal is to basically quiz Jason on every single detail of the Tax Wealth Builder Fund so that you as the investor can go in informed. Hey, how does this fund work? How could it benefit me? And all of those sorts of questions.
Absolutely. And if I may just kind of lay a little bit of a ground, I can't think of the word, but basically groundwork for why this fund. Investors are always looking for different tax write-offs. They're looking for the investments that are going to provide great depreciation, literally tax credits or tax savings, tax losses, tax write-offs. There's all these different terms, and different investments will provide different things. Some CPAs are more aggressive than others. So there's just a lot of strategy behind these different investments that can help maximize your ROI and maximize your dollars invested and your dollar returned. And hence the name, the Tax Wealth Builder. We want to provide an investment opportunity that's going to keep you from having to pay those taxes that you owe, invest those to offset this and those taxes, create a tax loss, and then with that investment, actually build wealth. There's different investments out there, that are supposedly provide really massive tax losses, but at the end of the day, it's almost like a donation. I don't know if you've heard of some of these. One of them I heard was you buy equipment or you donate it to the local fire department. They bought equipment, and then they were able to depreciate that so much that it gives you a 2 or 3x, which sounds great. But at the end of the day, that's still money just going out of your pocket.
Right.
And it gives you this large write-off that keeps you from having to pay more money out of your pocket to Uncle Sam, but you never see those funds again.
Right.
And there's multiple investments like that. Cost segregation was a big one. And I know that they got in a lot of issues with the IRS, and supposedly that's coming back. But again, it's just money going out that you never receive. So what we want to do is create an investment strategy that provided massive tax loss to help offset your tax liabilities, but be able to still build wealth and do it that's not in a risky format. Like oil and gas is one that provides massive write-offs.
Right.
And I love oil and gas, but oil and gas is also very risky.
Right. Yep.
So what can we do to provide that lowers risk but still gives those incentives that some of these others do, but allows you to keep money in your pocket and build generational wealth? And I think we've got the investment opportunity for you.
Yeah, sounds like you've got the secret sauce in this one, which, I mean, it's like you said, right? There are not many true tax-deductible investments. It's like you said, they're acting more like donations or giveaways. almost throwaways just to get the tax deferral versus an actual wealth generating machine.
Yep.
So if you're okay with it, let's dive into some of the specifics.
Yeah, let's do it.
What are we actually doing in the tax wealth builder fund? What is the investment strategy?
So it's still with real estate, and that's one reason why I really like it.
Yeah.
And it's different than apartments and multifamily and hospitality. It is commercial real estate. It is gas stations. And there are a lot of strategies behind the gas stations. People also do gas stations and car washes. Some people just do car washes. And there's ways to layer those to enhance the different tax credits or tax savings that you would receive. And we're not going to dive too deep into that because that would kind of overwhelm. But basically just want to kind of share the gas station strategy and show you how you can get some really amazing tax credits that turn into tax loss that will help you keep money in your pocket, but also build equity and cash flow.
Yeah, absolutely. So, all right, so gas stations. When you're looking at this particular deal, are we looking at new construction or are we looking at acquiring gas stations? What are we looking at there?
We're looking at both.
Okay.
And part of the reason for the different or doing a little bit of new construction as well as ones that are already in service, I think in some cases you're going to potentially get a little bit bigger write-off when you do new construction. The problem is you can't collect or receive those write-offs until it's completed and in service. So it makes you have to do a little bit of both. So this particular fund, we are the primary one, like the flagship, is actually a new construction, and investors won't receive the tax benefits till 2026.
Yeah.
But I've got investors who need tax write-offs now. So we are actually looking to compile 3, potentially 4 closes. 3 this year of stations already in service.
Yeah.
And so that way we can get and capture that tax loss for this year. And then next year, it's only going to be bigger.
Wow, that's amazing. And so you're talking about tax write-offs that investors could potentially receive from this. Now, just to help define that for investors a little bit more, when we're talking about tax write-offs, are we talking about depreciation? Or are we talking about additional tax codes that help with that offsetting taxes? What are we talking about there?
Yeah, so, and again, it's a little complex. We won't get into all of it. The biggest one is the depreciation that you would get in real estate. But what's nice is there's ways to compound it and accelerate it. In addition to that, there are different tax codes that also enhance or add to what you're able to get. For example, you could put in charging stations and get some tax write-offs. And I know with the big, beautiful bill, a lot of the charging stations and the solar panels and a lot of the green energy incentives, rebates, write-offs are kind of going away. That is primarily residential. For commercial, they're still going to be around until December 2027. So there's opportunities to capitalize utilizing those. And in addition to that, you can get some state rebates as well. So those are some ways to compound it. But the biggest write-off that you're going to get on this investment is the depreciation.
Okay, absolutely. Makes a lot of sense. Okay, so we've kind of talked through then some of the depreciation, what that will look like from an investment point of view. Let's maybe also talk about how we're actually generating that wealth and building that wealth for investors. So we've got tax write-offs in year 1 and in following years. What can investors expect in terms of any distributions that could be made, as well as any sort of equity growth that could be played in there?
So what's great is we own the real estate. We own the property. We own the land. And then we're going to triple net lease this to a franchise with a gas station company that everyone knows and is just continuing to grow and build, which is Circle K, and super excited to be working with them. And so we're going to be putting this on a triple net lease. Now, the cash flow is not why you do this deal. Now, will it cash flow? Yes. And we're projecting anywhere between 6 and 8%. Could exceed that. But again, you're investing in this more for the tax write-off and the equity growth. The cash flow is just kind of like the cherry on top. It's just fun money that's coming in just to add and build that ROI. But what's nice about this is based off, they have their own appraisals. And it's based off of gas that's sold out at the pump and then inside sales. And so if those are based off certain numbers, then they're able to pay certain amount of a lease, and then the value of those properties go up. And so it's really cool when you're able to buy one that's distressed, go and rehab it, and then add value to it that will cause sales to go up, allows the value of that property to go up.
Yep.
But then if you're doing new construction, there's a lot of value add opportunity. And so there's great equity growth within this investment strategy and plan.
Yeah, absolutely. And then also just to define for investors, when we're talking about a triple net lease, if you're kind of unfamiliar with that term, essentially what that means is that whenever we as the real estate developer are making a contract with these individuals and they are renting the space from us, they're leasing the space from us, they are also responsible as the tenants of that building for the insurance as well as the upkeep of the property, all sorts of things which are their responsibility, which to an extent most people recognize as lessening the sort of risk profile of the overall investment, which makes it more attractive for investors as well.
Absolutely. Absolutely. And again, also you're usually locking these in, for multiple years. So the lease that we'll have will be a 10-year triple net lease.
Right.
So that's just guaranteed. And if they break it, then there's cancellation fees.
Right.
And so there's a lot of opportunities that are out there. And I kind of want to dive into the numbers just a little bit. I know you got some more questions.
Yeah.
Would you like to wait and dive into numbers just a little bit, or is now the time you want to dive into those?
Yeah, if you want to go ahead and dive into those numbers, I think that would be great for investors just to hear how are the numbers going to work for them as the investor, how is it working on our end. You feel free to dive into that. So,
absolutely. So, and I don't have my phone on me. Do you have your phone on you?
Yeah.
So I can get exact math. I'm doing it here, and
you can't do it in your head yet,
man. Some of these numbers are a little crazy. So, anyways, this one particular property, we'll talk about the flagship new construction deal just to kind of give you an idea. Within this property, the building itself is going to cost, and that's the building, that's the pump jacks, the pumps, the canopy, the tanks, pump jacks, oil and gas terminology, kind of, cousins, but the canopies, the pumps, the tanks, all the infrastructure, you're looking at about $4.5 million.
Okay.
And the purchase of this land is $750,000. So you're all in, and I'll just make sure I'm saying it right, about 5.25. Okay, so 5.25 million. Now, what we're going to do is we're actually going to get leverage. So we're going to bring 25% of this to the table and then finance the rest, which means that we're going to be bringing 1.3125. Okay, so $1,312,500 to the deal. All right. Now, what's exciting is we're going to be able to depreciate 100% of the infrastructure. So that's, $4.5 million. So what you do is you times that by the highest tax bracket, which is 37%, which gives you 1.665 in a tax loss, right?
Wow. Yeah.
So, and what's exciting about that is, and I had to go through this numbers with the CPAs a couple times, is it really this good? This is great. But you're looking at 6.5 in tax credits. And by doing that, if you divide it by all money in of 1.3125, oops, I did that wrong. You're looking at about 1.27, 127%
Wow.
on your money.
Yeah.
And so just a really great strategy. And then in addition to that, it grows in cash flows. So based off of the appraisal that we got, this property is going to be valued at about $6.5 million right out of the gate. So again, you have the equity growth, you have the tax write-off, and then it cash flows another 6 to 8%.
Yeah, which is incredible. I mean, you don't see that level of a tax write-off very often for most folks, especially in a singular deal like this. So again, whenever we're talking about this, just to put this in realistic terms for you as an investor, this means that if you've received a lot of capital gains this year from the sale of a property, from the sale of some stocks potentially, or if you've got passive income that's generating lots of cash for you, think about if you could invest some of that capital and then get some depreciation on that would cover all of those gains that you would received that year.
Yep.
That's what we're talking about in realistic terms for you, the investor. So, just put that in your own, planning for the year ahead for this tax year as you're thinking about your tax return. So
Absolutely. And I know you had mentioned this, and so we'll say this and then wrap up the podcast. Why commercial?
yes,
We're a single family operator. Well, we're a firm believer that every investor should have single family as the foundation of their investment portfolio.
absolutely.
But we also believe in diversification.
Yes.
We believe in putting capital in multiple assets within the real estate class, and then also doing private equity, doing oil and gas, doing the stock market. Just using single family as that foundation. And for some investors, they need massive write-offs that single family just can't give.
Right.
And so they're looking for other opportunities, but they're also looking to do those opportunities with people they trust.
Right.
And so when this deal came across our lap, it's like, let's do it. And then from there, we've developed great relationships with people within the gas station industry that are only adding fuel to the flame, no pun intended, and it's like, wow, there's some really great opportunities. So it's very serendipitous, and so we're really, really excited to be able to offer this to you, the investor. So if you're listening to this podcast and you're looking to build generational wealth, that's the whole idea of the theme of this podcast, building generational wealth brick by brick. It starts off with single family, and then you can just start adding bricks and layers to your wall through using different vehicles and different assets and different strategies. So if you're interested, feel free to reach out to us. Now's the time to act. There's only 7 weeks left. You can connect with Colin. Go ahead and give your email address.
Yeah, email address of ccampbell@freakyfasthomebuyers.com. You can always reach out to me there. Be happy to schedule some time with you. Hop onto our website, freakyfastinvestments.com. You can schedule a call with our team there as well. And we'd be happy to talk through the details of the Tax Wealth Builder Fund with you and help you get those tax write-offs for this next year.
You guys have a great day.